Hello everyone and welcome back to the channel. Today we're going to continue building the financial model for the renewable energy project. But before we get started, I just want to show to you one of the questions I received on the YouTube channel. The question was sent by J. Brian to Sarah, and he says, the computation for insurance as a percentage of capex is incorrect. It should be blah 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 per quarter instead of the number in here, okay? And this is completely correct, okay? So let's gonna go back to the model and see how the insurance is being calculated in here and what exactly the person meant by saying that the insurance as a percentage of capex is incorrect. Scrolling down here, we have that the insurance as a percentage of capex is in here. Right now we have 0 here, but I'm gonna change it. I'm gonna go back to the model. I'm gonna come here, I'm gonna put a 1% in here, okay? And as you can see here, we have the calculation. So we're plugging here, it's a 1% of our capex, which is $20 million. So 1% of $20 million is $200,000. But this number is incorrect. Why is that? It is because what we have in here is not 1 year, it is 1 quarter. So we fixed these things in previous video, and I mentioned to you that it's very important that you always double check whether you're working with yearly periods, monthly, quarterly, or even semi-annually, okay? In this case here, we work with quarters. And I did fix everything or all the costs and revenue for accounting to a quarterly period, as you can see in here. So if I press F2 here, you can see that the fact we have these 3 inputs in here, it's only to fix for this quarterly calculation. So I'm going to copy this in here. I'm going to press enter, and I'm going to just plug these things in here, okay? So I'm going to just do it in a better way. I'm going to open a parenthesis in here. I'm going to close it here, and I'm going to multiply, and I'm going to paste here, okay? Let's see what's wrong. Okay, the Excel fixes it to me. So what we have here now, we have a $50.6 thousand per quarter. And if we multiply this number here by 4, we're going to get the same number as we get in here, right? So this is the right formula. So I'm going to copy and paste everything across here just to fix it. And I'm going to just go once again so you can understand why this is the right calculation. And so let's see what these inputs are and what we're calculating in here. So first thing, we have the interval period, which says 1 here. So this is an input of the model. So if we go here to the input sheet and you go up, we can see that our interval between periods is 1 quarter. So in fact, what this means that every single period represents 1 quarter, which is exactly what we have in the dates here. In the start and end of the period, we have a 1 quarter. Okay, so that's what we have here. Then we have the months in quarter and months in year. If you recall, these are technical inputs of the model. And the way I did it, I just add these technical inputs in here. And you can see here that I have saved this cell here. I gave the name months in a quarter, and the one below months in a year. So when you combine all these things together now, you adjusted the full calculation to whatever number of periods you have, okay? So we're gonna have 1 quarter here. We're gonna multiply this 1 quarter by how many months there are in 1 quarter, which is 3. And then I'm gonna divide it by how many months in a year there are, okay, which is 12. We're going to have 1 times 3 divided by 12, which is 3 over 12, which is 1/4. And that's correct. Now let's go back here and change this for 2 quarters, right? So we're going to have every period now is going to be 6 months. Let's see what we have here. We have from 1st of January to 30th of June. Then we have 1st of July to 31st of December, so that's correct. And what we have here, we have just doubled the value or the cost of the insurance for each period. So everything is consistent, right? And if we go back here to the formula, what we have an interval period is 2 times 3 divided by 12, which is, it is 2 times, is it 2 here? 2 times 3 is 6 over 12, which is one half or half, right? So which is exactly what we have in here. So This is the way you should do, okay? Always make sure that whatever you're calculating here is being calculated according to the right period that you have in your timeline. One more thing here, just to be precise, okay, I do not need to put a per year in here as we had before, okay? It should be timeless here. Why? Because each one of these units here represents percent per period, okay, per period. In this case here, per quarter, because every period here has 1 quarter, okay? So that's it. This is the first part of the video. Now we're going to go to the second part where we're going to calculate the tax loss account. And if you have been following this series in here, you know that I in purpose left all these things here without any calculation. And I'm going to explain to you what this is and how to do it. So I'm going to first here, I'm going to get out of the colors and explain. So what is a tax loss account? Tax loss account basically is an account that you're going to have in your model where you accumulate loss generated on your income statement, okay? So here we have only positive taxable income. So let's say we would have here a negative number, okay? So there's a loss in here, okay? Because you lost cash or lost revenues, you should not pay tax, right? So in this case here, the way the model is given now, you have a tax rate of, or have a taxable income of $167 negative, and then you would receive back $33,000. You can use the model like this as long as you know you're going to have somewhere else in some other revenue stream in your company, you're going to be able to offset this number here. But sometimes it's not possible. Sometimes you finance your project based on the project's cash flow, okay, which is a project finance, and then you need to account for that you can actually pay off your debts only, or pay off your tax based on the cash flows of the project itself. Okay, you cannot offset it. Okay, so that's what we're going to calculate today. How to do it? So let me just copy and paste one more here just to make it easier. And if you recall from previous video also, an account in a financial statement like this always has an open balance and a closing balance. Okay, and I'm going to just add here a top border so it's clear. Let me get rid of this grid lines too. It's a bit annoying. Okay, so what's going to be our open balance? It's going to be equals to the previous balance close, which is in here. And I also like to get like some color in here just to demonstrate to the user that this cell here is being used, right? So if I type anything in here, it's going to show up in there, okay? So that's it. And in the end, we're going to have that's going to be this. It's going to be equals to the sum of everything in here. Okay, so let me double check. Yeah, there's two parentheses. Let's going to get rid of this. We don't need it. I'm going to copy and paste everything across. Okay, so we already have 2 rows of our tax loss calculation. That's quite easy. So what we're going to have here? In this row over here, we're going to accumulate all the tax loss generated. Okay, so what we're going to have this number to be equals this one here, right? But I want this number to be a positive number. Okay, I want it to be accumulated over time in here. So that's what we're going to have, right? So, but are we going to accumulate everything? No, right? We're only accumulating as long as we have a negative geared taxable income. So what we're going to have here, we're going to say that this is going to be equals to the minimum, right, of 0 and this number here, okay? And that's what we have. Let me see if that's correct. Let me see. Yeah, so, no, it's wrong. It should be the minimum of 0. I see. Should be the minimum of this and this. Let me see. I'm just trying to figure out. Yeah, that's it. No, did everything wrong, right? So it's the minimum of the 2 numbers in here. Cool. So we are accumulating, right? So if this number here is also a negative number, then we're going to keep accumulating here in our open and closing balance. Okay, so that's it. The next thing now I have to calculate when you're going to use it, right? So we're going to use it whenever we have a positive geared taxable income and we have accumulated. That's wrong here. Sorry, guys. This is wrong. Should be a positive number. So here now I have to multiply by -1, right? Okay, let me see here. I think now everything is correct. Yeah, because I want to accumulate positive numbers in here, right? So let's go back. So what I want to do now, we need to set up this tax loss utilized here. So when we're going to utilize this tax loss, whenever we have what? A positive geared taxable income, and we have some sort of accumulated tax loss, right? Because we can only use it when we have accumulated. So this is a case here. So we have positive taxable income and we have accumulated tax loss. So what we're going to do here, we're going to use what? The minimum of this number here and this number here, correct? I think so. And then let's see. Then I'm going to multiply by -1 here. And that's it, right? So I'm just copy and paste the style. So let me just fix the style here because I just don't like to have this in different styles. Okay. So there we go. Let me see if you copy and paste this here. Should we use anything in here? We should not, right? Should be only when this number here is more than or greater than 0, right? So it should be the minimum of what that should be. So this is not right, right? Because here should have 0. So let's fix this. So what we have to have here, if what? If this number here, oh gosh, let's go here. If what? If this number here is greater than 0, then I'm going to calculate it. Otherwise it should be, let me just go here, should be 0. Let me see. Let's see if this is correct now. So I'm going to copy and paste. Yes, sounds like good, right? So let's see here. So if this number here is greater than 0, we're going to get the minimum number of these two here, right? Why? Because it can only offset the amount of tax generated we have. Otherwise, it's going to be 0. So the difference between these two is here. It's going to carry it over forward. And here, because this number here is less than 0, so we're going to accumulate. It is accumulated. And then we're going to just start offsetting everything. So we're going to offset as we go along here. And everything gets offset, right? So I think this is correct. So I'm just going to copy everything across here, right? To make sure we have everything. So I copied. And there we go, right? So everything looks more or less okay to here. So let's see if we copy and paste this thing here. I just keep accumulating because we're just making negative taxable income. Then once we start making it positive, we start reducing the balance. So every period here, we reduce the balance until we reach everything here. Cool. So that's it for the account. But now I have to fix also the tax paid, right? So because the tax paid is being calculated, as you can see here, out of this number in here, which comes back from here. So now I have to change this number here, right? So what I have to do now, we have to get the numbers from here, from after the tax loss account has been accounted for, right? Because for example, in this case here, we lost money, so, or we have a negative taxable income, so there should be no payment. So here should we have 0. Here we should have also 0, 0, and 0. And here we should pay 176. So that is correct in here. I just want to change one thing here. Let me just make this number here positive. Okay, I just want to, because that's easier for analyzing how to calculate it. So how to calculate it? So we're going to calculate, well, how? So if we have 0 here, we should not pay. Otherwise, we have to pay the difference between this number here and this number here, right? So let me see a case here. We're going to pay the difference between this and this, okay? Now let me just do one more thing here. Let me just copy in here. Okay, let's just go like this. Let's see in here. I just want to see if that's going to work well. So what are we going to have in here? So it's going to be what? It's going to be the max of this number here. Sorry, 0, right? So, and what? And most likely this plus this. So we pay 0 here. That's correct. Here we should pay. Now we should not pay because we offset everything, right? That's good because we can offset. So that's going to keep going forward. Okay, so this is a good, let's see. This is a good case to see. So we made money, so we have to pay tax, right? But we're going to offset it for whatever we have here, and we're going to pay 33,000, which is the sum of the two, right? But here we don't pay because we're offsetting everything here, so that's why we don't pay. So this is correct. So as it stands here now, if we copy everything across, you can see we're not paying money because we're only accumulating losses, okay, until the point where we are using them, but still we can offset more. So we keep offsetting until to the point where we start paying tax, or sorry, we have a positive net income, which will in exchange of paying tax, okay? That's basically it. What we're going to do now, if you recall, so this is for the geared tax calculation. We can also copy and paste everything here for the ungeared one. So I'm going to go here, I'm going to press enter. I'm going to check if everything is correct in here, and apparently is. I'm going to copy and paste everything across. And we also have in here, right? So if we have a negative number in here, okay, so everything seems to be working well. So let me just a little bit more. Yeah, everything seems to be working well. I'm just going to copy and paste everything across here to fix. Sorry, let me copy from here. Okay, the same here. I just want to make sure that this is also correct. There's no negative numbers, and of course there's no tax loss generated because all the tax income is a positive numbers, right? That's it for today, folks. I hope you have enjoyed the video. Please subscribe to the channel and give a thumbs up if you learned anything from today's video. I'll see you soon.